Hello and welcome back. This is Colin here.
I'm Brent Sanders.
And we are two guys buying and building wonderful internet companies.
Wonderful internet companies. Yeah. And on that note, we need to maybe come up with another name, right? Another word for beautiful business. What's another, maybe just internet companies. Didn't want to lead with this, but we gotta, somebody filled out a couple of forms being like, you got to stop copying Tiny Capital. And so I looked, I think that must be the tagline. It's too similar. I mean, we obviously want to be them, and I will happily accept any criticism that we're copying them. We are trying to be them as best we can.
Yeah, I'm all about shameless copying people that are billionaires. So I'm happy to copy every single one of them.
Yeah,
but
I think that's the way.
It's funny. I think Andrew popularized the word wonderful, but I think he stole it from Warren Buffett. I assume that's why I don't know if as a single guy decided to fill out all their forms and say you're copying Tiny. But yeah, I like the word, so we're going to continue using it. So take that,
yeah.
Random stranger.
Maybe that's the new way. If you want to send in topics, you can just fill out all of our forms and throw a grenade at us. Be like, Colin needs to shave. He's got bacteria on his face. Whatever you need to do. But I don't know. Would you say? I mean, we only have a couple companies, so. Wonderful. I don't know. Maybe we'll come up with a new one. We'll come up with like a really distinct adjective for, all the companies. And then that'll be our rubric from then on. But I would say we could just say internet companies, buy internet companies.
Yeah. I tried beautiful for a while and I just didn't think it was as nice as wonderful. But as far as who we're copying, I'd say, Mark Leonard is probably who we're copying more closely than Andrew. Andrew just bought AeroPress. I like the purchase, but we're not entertaining random coffee suppliers as acquisitions.
Yeah. Yeah. I get it. Those things are great, but I don't have any interest in doing physical product.
Since you jumped into Andrew, do you want to talk about them going public first?
Yeah. Huge, really exciting news. Like, I don't know what it means for the space in general. Other than being a huge positive, but yeah. So Tiny has gone from a private, portfolio company and I'm confused. So I don't know much about WeCommerce. I knew the name, but did they basically bring together two players, or did they already own WeCommerce? You probably know more about the backstory than I do.
Yeah, they not 100%, but mostly owned WeCommerce. So that's like a bunch of Shopify apps. I think it started out at Pixel Union or some template company that they owned, sold, and then bought back, and then started raising more money and buying more. So it's like a holding company of Shopify apps effectively, but it was smaller. I don't know what the total was. It would be in the article, but they decided to do basically combine. So it's kind of like a SPAC situation. It's a smaller company combining with a larger one, which is Tiny, which is their holding company and going public. And some of the numbers are, the new enterprise value is about $1 billion. Andrew owns, I think 71% of it. Chris Sparling owns 10%. And I think, who's their investor guy? He owns just about the rest of it.
Bill
Ackman. Yeah.
Yeah. Who's like legendary activist investor.
Yeah. So there's a lot of cool stuff
before. Sorry. One little thing about Ackman, if you're not familiar with him, there's a semi, famous documentary about his crusade against Herbalife. It was on Netflix, and it's an interesting one where, it doesn't paint him in the greatest, like he's not just a guy, but he's a really smart guy. And he was kind of going after Herbalife, saying this is totally illegal, which it came down to them, they ended up, thriving. They ended up doing fine, but it exposed all this like shady shit they do where, it's multi-level marketing. It is legal though. That being said, that's how I learned of him. I'm, not huge on, a fanboy of investors and stuff, but that came out a couple of years back, and interesting guy. And so, yeah, apparently Andrew paid like $50,000 to have lunch with him. Was it
57,000?
Like a charity?
Yeah. So that's how they met each other initially, hit it off. And then, Bill has invested in the holding company and they've worked together kind of ever since. So that's pretty cool. It's cool. Like, he paid money to get in the room with this guy and it actually really worked out. The other cool thing here is Chris Sparling, who's like, I didn't know what their partnership was like. So it's 10% and 71% now. But the way it started was funny. Andrew had this super successful agency called Meta Lab. He's in the middle of nowhere, Victoria, Canada, which I've actually been to. I had a wedding out there before I knew of Andrew. Super small place just outside Vancouver on an island. It's like maybe 20, 30 minutes drive across the whole island. But he was really successful, had all these clients in like San Francisco. I think he went to the local bank and he's like, does anyone know finance? I need someone that like knows accounting. And Chris is like, at the local bank, he's like, I can help you out. And then he's like, great, I want to hire you. And now you're my partner. And that's like kind of how they got started.
That's so cool.
And now, Chris owns 10% of a $1 billion company. So, congrats to those guys. It's awesome.
Yeah, that is so awesome. Yeah, I guess so. Like the overall reaction is like super encouraging that like, it's hard to think of somebody who's buying wonderful internet. What do they call their companies? Are they also wonderful internet companies? Yeah, they have the wonderful internet companies, but even still, like just to see, okay, there's a pathway to going public, even and seeing others do it, which is like a huge point of representation in this space, I guess, is seeing like little guys can turn into big ones. So yeah, super exciting news.
Yeah, it's crazy. So I would say it's even harder to do this in Canada, but they bootstrap the whole way. So they never raised outside capital, no venture capital, no like even SBA, 7A loan, bank debt to get started, that kind of thing. They just, built a money-making business and plowed that into other acquisitions and scaled to $1 billion, pretty quickly. So it's just super cool to see something like this. And
the agency model, the agency model works for generating a ton of cash. And I think that's where, I had an agency for 15 years and, what I decided to do was plow then into a studio model, which, I think I'm not saying a Meta Lab and Fulton Works for anywhere in the same realm, but still like there is this idea of like, okay, you have all this excess capacity, you have these talented people. Could you be building equity with them? And it's hard to do. It's not trivial to say, hey, I'm going to, take resources away from paying projects and, essentially allocate those to the right things. And I would say, I tried it and I wouldn't say I failed, but I definitely am not going public with a bunch of companies. So I definitely see the balance there and it's challenging and it's awesome to see them succeed so well.
Yeah. I wonder why he did it. This is the obvious reason is like liquidity or access to more capital, but it's also just, it's awesome not having the reporting requirements and being your own private little kingdom.
Yeah.
So he hasn't talked about it on a podcast yet or anything. I'm curious to hear why he chose to do it.
Yeah, that does strike me as like, it's a whole different beast. And I'm wondering like, what's that going to impact? Maybe nothing. But yeah, you're now a public company. Yeah. As you said, the reporting requirements alone would kind of scare me away, but I guess the numbers don't scare me away. That's definitely the best part of it.
Yeah. They already had a public company, so maybe they had the infrastructure and decided the benefits are worth the downsides. But clearly they decided that for some reason or another. But all right, you want to talk about less fun stuff, legal?
So I've been giving Colin a lot of shit about this topic. It is a important topic, but I've been just saying it's like talking through the Dewey Decimal System. But it's interesting if you have multiple companies or if you don't have any companies. But it actually is a question I get. It's the first question you get from people that want to start something or maybe have something, but it's all about structure. So C Corps, LLCs, what do you do with these? How can they be kind of stacked in a way to build some tax advantage? And, the first caveat we're going to throw out here is last I checked, you're not an accountant or a lawyer. So this is not like advice. This is Colin doing research and sharing it with us. So don't get mad at him if you fuck this up.
These are my notes. And if you're listening to this in the future, far in the future, the answer is probably different than what it is today. So this is just,
that's the other thing is a lot of the tax stuff like may go away. Like which we're going to talk about QSBS. It's definitely on the line, but why don't you dive in? So like, let's start with a background here. Like, why did you dig into this?
Well, we have 3 companies now. And so if you're just getting started, it's just like, I'd set up an LLC, go make some money, you're off to the races. But once you have 1 company, 2 companies, 3 companies, at some point you have to figure out how do you structure these things for like minimize taxes, minimize liability. You could throw debt on each individual company, or if you're going to sell in the future, how best to. So we were going through it, thinking of this fundraise, bringing some money that isn't our own into these companies and how best to approach it. So There's a lot to go through. So we're going to talk through LLCs, C Corps, S Corps, QSBS, gotchas, and then structuring a holding company, because there's all different ways to do that. So feel free to interrupt. I'll try not to cough. I'm getting over COVID, so I'm just coughing nonstop. But so LLCs are limited liability companies. It's an entity that provides its members or owners with limited liability for debts and obligations without incurring corporate taxes. So an LLC acts as a pass-through entity. So for tax purposes, it's treated as if it doesn't exist. So you could stack them. You could do LLC, owning LLC, and basically they're ignored up until they run into a taxable entity, which is either an individual or a C Corp. And so the profits just keep flowing upward until it runs into one of those things. And then that person or C Corp pays taxes on it.
So really, really quick, this is generally like our default it was always my default. So if you want to be a software consultant, start an LLC, you file a Schedule C on your I believe it's Schedule C, but you just file an extra thing on your taxes. It goes in, you don't have to file a separate corporate return. It's cheaper, it's easier. You get the corporate shield. Like it's the easy go-to. And I think when we go through, we've started a couple of companies just to get something started. We'll just set up an LLC, right? It's the easiest thing, like through Stripe Connect or Stripe Atlas, and just get the docs. And this was more so a couple of years ago. I think we started like Avocado using just plain old LLC terms.
Yeah, the carrying costs are cheaper. The setup costs are easier. So if you're just doing consulting, or like you have a course business or something simple, you just use an LLC. And then as you start making more money, you make over 100,000 or something in LLC. Often your accountant will say to become an S Corp. And an S Corp is just a tax designation. It's not an entity. So this lets you become an employee of an LLC instead of just an owner. And so a C Corp or an LLC can be treated as S Corp for taxes. But the one big advantage is that as long as you pay yourself market salary, say like 100,000 or whatever for most, you only pay self-employment taxes on that W-2 income. And then the rest of the profits are taxed as partnership proceeds. And you don't have to pay self-employment taxes on it, which is a pretty big distinction and a big cost savings for a lot of folks.
Yeah. And that's how I run my consulting side of what I do. I mean, it's the other big thing that you can do that is a huge tax savings if you're into that world is like a SEP IRA, especially if you're the only person in that entity. You pay yourself a salary, you can then throw all of the remainders into tax deferred account, which is super efficient. But you also have to have a bunch of extra cash on top of your salary sitting around. So yeah, it's a great way to go to get started. Great way to go if you're doing like consulting. But for software businesses, especially, a group of software businesses, maybe not so much.
Yeah. And so that's LLCs, S Corps. The next thing is C Corps. So C Corp provides its shareholders limited liability for debts and obligations as well. But the downside with it is corporate taxes. So LLCs don't pay corporate taxes, C Corps do. And so it has to pay those corporate taxes before money can be distributed to shareholders. So this is known as double taxation. So shareholders, the corporate entity pays taxes, and shareholders as well will pay taxes on dividends. This used to be a much bigger deal before the Jobs Act. So it used to be 55 versus 37%, but now it's actually much closer. So the C Corp tax rate is 21% right now, which can change. The top dividend tax rate is 20%. So that's 41% all in. And the top LLC tax rate is 37%. So now it is 41 versus 37, which is pretty close. And so the big reason, or one of the big benefits of C Corps in this kind of small business world is QSBS, which is something people throw around all the time on Twitter. But it basically means you could pay 0% in federal taxes on a sale of a company up to $10 million. It could actually be more in different situations. It could be 50 million, but for our purposes, call it 10. And that's per person and per company. So you could sell 10 companies in 1 year and have it all be 10 million. But the criteria for that, C Corp has to be a C Corp. You have to be a founder, employee, or investor and hold the stock for 5+ years. There's only some sectors that are allowed. So tech is allowed. That's great. Farms, banks, professional services like law firms, CPA firms don't qualify. There's some funky stuff like you could give your spouse and kids all shares to multiply the benefits. I guess spouse is becoming a little murkier. They don't like that, but I think kids are still fair game. And then you could do 10 million each on all those. QSBS has to be owned by a non-C Corp. It can't be owned by another corporation. So it could be owned by an LLC or individuals. And it requires the exit to be an equity sale. You can't do an asset sale, which is the default for small acquisitions. So another hiccup there. You could also roll over, which I didn't know until somewhat recently. So if you sell before 5 years, you could roll the equity into another qualified small business. So that could be, it just has to be 5 years total.
Interesting.
Yeah, that's a really nice one. Other kind of gotchas, Congress can kill QSBS at any time. They've talked about doing it. I'm sure they'll continue to try to. The 21% corporate tax rate may not be permanent. So that could go up. And then if you're all C Corps, you're going to be paying a lot more taxes. If your cash pile gets beyond reasonable needs, it could get taxed. And what is reasonable needs could differ. Yeah. So basically you want to go with the C Corp if you're planning on selling. And you're going to do it in equity sale. So that's QSBS. If you want to fund future acquisitions, it's a good way to keep cash in the business without double taxes. So that's 21% versus 37%. If you have investors, it's nice because the QSBS and no pass-through taxes. So it's easier and cheaper for them. Most of them strongly prefer it, and some will only invest in C Corp. You could trap losses. So losses can be carried forward. If you have like a money-losing startup, it's kind of nice. If you plan on structuring for compounding a HoldCo, most go with the parent C Corp and then LLCs and C Corps beneath them. So it holds cash up top and then it pays the lowest tax rates. Basically, profits flow up the chain of ownership until they hit that parent C Corp and pay taxes on that.
So like pausing there, let's say you have 3 companies, you have 2 winners and 1 massive loser that's, you're investing in growth. It allows you to essentially even these things out. So you basically have these tanks, using that analogy of like fluid filling up. And if one is empty, but the other 2 are full, you can essentially offset those with that, which is similar for our situation, right? It's like we have different entities at different stages and are planning on continuing to have different entities at different stages. So it's nice to kind of smooth all that out.
Right. There's also, so that works great if it's a C Corp up top, LLCs beneath, but you could also do it with an LLC up top and C Corps beneath. So if you want each individual company to qualify for QSBS, that's another way people approach it. And then there's some weird things like, so you could do a C Corp consolidation. So if a C Corp owns 80% of a subsidiary, it's able to consolidate financials. So money losing companies can shield the profits of profitable companies. Or what was the other one? Dividend deductions. So yeah, if a C Corp owns more than 80% of another one, it could deduct the dividends. So that's like what Warren Buffett uses, that he could move capital around, even if it all is C Corps that he owns.
Oh, interesting. So yeah, like there seems to be all these different mechanics. Like if you are SaaS business owner, you have one business, you've got an LLC, let's just pretend for the sake of argument, like who do you go to, because this is where I always get kind of confused. I talk to a lawyer, they're like, you need to talk to an accountant. And then the accountant is like, you need to talk to a lawyer. It's like, I never get a straight answer on this stuff. And I think that's why this info is good. It's like, you kind of have to self-direct a little bit of this, like learn it. But as you've probably found out, this stuff's super dry and a lot of people just kind of glaze over and just like, you know what? I'll worry about it.
Yeah, I think you checked out for like the last 15 minutes here.
I mean, it's not the fun part. I guess this isn't the reason I got into this world. It's not the fun part to me, but it's super not fun to get double tax or to pay more tax or to, so it definitely captures your interest once things are successful and things are like, you can't really go back and undo it. So like, who's the right person to ask if you don't want to do the legwork? Like an attorney, an accountant, both? Like, I guess that's always the hard thing, to find somebody who's kind of has that both in-house and can give you that guidance.
So it's a specialist accountant. How did I find the one I've talked to before and used, I guess, is Joyce. So one of our attorneys introduced us to this kind of specialized accountant.
Oh yeah.
That knows how to structure these things.
Shout out to Joyce and Good Counsel.
Yeah. So it's not like, I don't know, not our normal bookkeeper or accountant guy. It's like a specialist that, charges way more per hour. But if with all these like professional people, the good ones, at least you could talk to them for the first meeting for free. And that's actually what you get most of the value out of, at least for this kind of thing. You just have to know like what the recipe is, and then you could go hand the recipe to someone else to cook it. So that's kind of how we got there. If you need advice, you could reach out. I could connect you.
Yeah. And now that you've done this work, now that you've kind of gone down this path, I'm pretty sure we're going to change our entities around, right? Like the impetus for this was like, hey, we need to convert some things. We need to change some things. So is that the game plan essentially? Is like, we want to basically look at switching all these to C Corps?
Yeah, I think anything we think is going to sell for a meaningful amount of money should be a C Corp. Even if we're not sure it's going to happen, the downsides are pretty minimal. Like the tax rate is not significantly different. And the upside is monstrous, right? If we end up selling these things, Scout takes off, Automatic takes off, we sell it for 20 million. Like that is a significant difference in taxes in the future for us. And it's not like, it's a little more of a headache, I guess, to transfer things over, but it's not a big deal. I don't know. It's a few $1,000s or something.
Well, now's the time, right? It's like these acquisitions are fairly new. Everything's within, a year or two. And there's not a lot of history that we have to kind of go back. I don't even know what the process changes. Not that we'd have to do an audit or anything, but again, we haven't grown these things to the point where it's going to be so difficult.
Well, it's easy too, because we own all the equity, right? So it's just you and I re-signing things. It's not like a bunch of employees and investors. That would be more complicated.
Yeah. And I'm waiting till you ask me to sign it. I'm like, Colin, we need to talk about equity. We need to have a heart to heart. No, just kidding. Yeah. It's an interesting subject. It's a necessary evil, right? To like structure these things. I guess like the one question I'd have is like, and we've talked about this on prior acquisitions of like, have you thought about or seen anything like converting or, essentially acquiring like a foreign entity? Because we've had a couple deals now, 2 so far that got, I don't know if we had them both under LOI, but 2 that got at least close to that where, we were going to have to set up something here, sell the assets to it from, a foreign entity and figure that out. I guess that's a good question for folks that are thinking of doing acquisitions, especially ones that are even Canadian or Mexican, whatever you're, something outside the US.
I don't know if any of it matters. I don't think it cares, right? If you're setting up the C Corp here, qualify for QSBS, you buy all the assets, bring it into it. The US government doesn't really care about anything that's outside the US. So to them, the company looks like, you bought it for 40 cents or whatever, or $40, I think is what it normally is with the C Corp if you buy, 50%.
Nice.
I think that's all they care about.
Makes sense. Well, this has been a great chat about accounting and a corporate structure, but important nonetheless. I think, as we think about, we kind of go back and forth in this idea of having like, is this a holding company? Is it not? Are we going to sell these things? Like strictly speaking, it is not a holding company in my mind. I don't know. I went to the HoldCo conference and came out of there thinking we don't have we would totally sell these businesses. Are you kidding me? Like if somebody came around and said, hey, here's, the right amount, like absolutely would sell these businesses. But, I would still say at our phase of growth right now, I think of it as a holding company. I think of it as like we're using, proceeds from one business to try to help grow another. Like we're moving these things kind of up together. And so maybe I think there was another distinction that we defined that's better for it. But anyways,
accumulator is what Constellation would be considered and what we would be considered. It's like on the spectrum of a holding company. Yeah, we definitely are. You could be a holding company that sells. That's often why you end up with an LLC up top and, C Corps below, because you want those to do QSBS and it's more flexible governance to do an LLC up top. The other question is like, do you need anything up top, or we just as individuals own the QSBS, qualifying shares? And the reason you put it LLC is like flexibility. You could bring investors onto that top range and more flexible governance and different things.
Makes sense. Cool. Well, I think it's been interesting to at least walk through in the context. All this stuff is abstract unless you slap like, okay, our business is on it and see like, okay, well, what is this actually going to mean for us? So that part of it is always interesting. But yeah, I don't have any other questions. Anything else you want to mention about this before we move on to the next hot topic?
Just get good advisors. This stuff matters a lot. Like if you're actually thinking of exiting in 5 years, so getting things set up properly at the start is good. Hopefully this is like a nice introduction for you, but shouldn't be what you're basing all your major life decisions on. So go talk to someone that knows it better than me.
Yeah. I guess the thing that scares me about the QSBS is that it can go away. Like it's such a holy grail. Everyone kind of is interested in that and it's a great incentive, but yeah, I just get nervous that like somebody else gets voted in or there's some political noise that happens and then it's like, yeah, it doesn't exist anymore. And that's the whole reason we did something or made a choice. So I guess just has to be other reasons backing it.
Yeah. What would be bad is that the C Corp tax rate goes back to like 40%. and then QSBS
Yeah.
dies, and then you're paying like 60% instead of 37 and for no real benefit anymore. That would be a bummer,
exactly.
but he probably just reorient things somehow. Cool. But yeah,
anything else you wanted to mention before we move on?
No. Right. The other big update is I survived COVID. It turns out COVID is not fun. I've been sick in like 5 years. I didn't enjoy it. I don't recommend it.
Yeah. So how did you get it, first of all? Was it probably flying?
It had to be just timing wise. I think sometime in Chicago. I've been in Florida and I'm staying in Florida for the number of extra weeks here. But yeah, I don't know. COVID really got me. It was really not fun. I just stayed outside, trying not to get anyone else sick, and seemingly got no one else sick. So it was successful in that case.
So the worst part about it, I don't know, like I've had it a couple times, but the one time I've had it was just the fatigue. Like you're just tired. You can't do anything. You're just worthless. Did you feel like that?
I had a really bad sore throat. The bad sore throat was probably the worst. I'm also just a complete nose breather. And not being able to breathe out my nose is like the end of my life. I just couldn't breathe. That was not fun. But that was only like 2 days of it. And then, just tired. I basically laid, we have like an outdoor couch. So I laid outside all the time. Just
that's the
try
best.
to contaminate everyone else. But yeah,
you look
nice.
like you have a
Florida's
nice little
great.
tan, nice little glow, a little post-COVID glow. So Florida's treating you well.
Yeah. I like warm weather. I'm pumped to move to Austin.
Oh yeah. So when like, I guess going on to personal stuff, you are coming off. So are you like officially back from your paternity leave now?
I mean, it's fluffy, right? So we don't have daycare yet. Daycare starts in like a little less than a month.
Okay.
So that's
what are
I'll
you
be
doing for
completely free
daycare?
during
Big
the day.
questions.
What do you mean? It's just like the local daycare.
Oh, you're going to do, so we had a nanny though. So like that's what I mean. Like we had a nanny, and my wife was very opinionated about this stuff, and I kind of wished we did daycare, but I think the downside is they get sick more, but they end up going to school and they end up getting sick anyways. So that'll be, so you're doing daycare every day, and when you go back to Chicago, right?
Yeah, basically a little less than a month. And so I have other friends that have gone different ways. They say babies don't get this socialization benefit till like it's a year and a half or something like that.
Yeah.
So I guess technically babies don't play with each other. They just are in their own little worlds for like a little over a year. So that's the reason to do a nanny.
Play.
Yeah. But we're also moving to Austin. So we're only at daycare for like 3-4 months or something like that before the summer's up.
It's coming up soon here. So you're moving. And then do you even have you looked at houses? Like the whole moving thing, that's going to be a whole thing.
Yeah. I've been looking at like neighborhoods and just trying to get like a feel for real estate there. My wife's start date is like October 1st, October 2nd. So we have to be down there for then. So we're kind of thinking, trips over the summer to try to find a place.
All right. Well, holler at Colin if you're selling a really well-priced home in the Austin area. I guess would you guys rent for a while until you found the right place?
I mean, I think ideally you find something you buy over the summer, but
yeah,
I think that's probably where we end up. But so real estate in Austin's also gone nuts. So it's dropping.
Yeah.
I think 15% more is what Goldman Sachs was predicting this year. So I'm hoping that happens sooner rather than later, not like after we buy it. So we'll see. Fucking
Joe Rogan moves anywhere and then it's over. The housing market's just, light on fire. It was Malibu and now it's Austin. I'm kidding. Just totally kidding. I got to say the one thing I've been realizing lately is the wealth of having grandparents around. So my folks don't live anywhere near me, but my in-laws do. And just so when somebody gets sick or whenever, I got to say that's been an amazing thing. Do you think anybody's going to come down and, maybe have a place to stay, or are you setting up any landing pads for family?
Yeah. So in Austin, there's a lot of these homes that they're like bungalows and then they have a casita in back. So like a little freestanding house. So I think they're pretty lax, building permits and everything. So ideally we buy a house with one. And if they don't, I think it's fairly easy to get one built. So that would be the plan. And it's Austin. So I think people are going to be happy to come visit the warm weather. All our families in the Midwest. So at least that's the hope. We'll see.
Very cool. Well, we're excited to see, as things come back to reality. We've got a lot of fun stuff to work on, and, all the things that we're working on as far as having you back full time off of parental leave.
Yes. Yeah. Back to it. I'm excited.
Done with changing diapers. I think that's it. I don't know. Any updates on my end that are more product oriented, but I don't want to bore people with that stuff, and we'll just bore our customers with it.
Yeah, we'll have more fun updates on Scout and everything, I guess, soon. Let's just batch it all into an episode.
Yeah, we should. I can rant about all the code and other stuff. But yeah, well, I think that's all we got this week, right? Anything else in your end? I guess that's the list of topics I got.
Yeah. Sounds good. All right. Till next week. Take care, everyone.
Thanks for listening.